Welcome back to the Value Investors Club. I'm your host, Timo Wunderlich. Let's get right into it with the VIC readings, the format where we look at the best of the best value investment recommendations by the best of the best value investors out there. Today we have NVIDIA CORP, ticker is NVDA. Price at the point of filing is $279.65. Let me first say this is not recommendation or advice. Please do your own diligence before investing into anything, and let's get right into it. Description, preamble. NVIDIA was posted earlier as a short here by Google 913. I'm writing from the other side to present my long thesis on NVIDIA. The stock has rallied hard since our underwriting, and pitching it at this time is seemingly difficult, especially given the year-to-date run-up and outperformance relative to the rest of the market. We are long-term focused, patient investors, and I can't find a better idea to write up before the submission deadline here, illustrating my variant perception of the business. I editorialize most of the technical concepts to help advance the debate on the business fundamentals. I believe in a concentrated yet balanced portfolio, including some best of breed names along with some structural hedges with other ideas targeting a risk adjusted positive skew. NVIDIA was underwritten as a key ingredient for our growth exposure over the next 5 years in this new compute cycle. I'd argue it is much less of a cyclical semi and has better structural modes than several software names. Given a product cycle driven and potentially catalyst rich backdrop and a new compute regime, I go over my investment thesis, providing some context around the underlying tech. I address a set of key bear arguments and hope this is helpful to think through the key debates. Investment thesis. Number one, NVIDIA GPUs are general purpose accelerators that should continue to take share in a data center. First, here's the context. Per an empirical law proposed by Gordon Moore, RIP, transistor count on semiconductor chips doubled every 2 years until recently. Another empirical law, Dennard scaling, was based on power density being constant when transistor size decreases. So, clock frequency scaled higher and chips got faster. But that stalled after 2005 because of heat dissipated at small dimensions. Then came the concept of multiple cores, chip components that execute instructions. Central processing units, CPUs, use multi-cores, 128 cores, in some latest ones in the market. 128 cores in some latest ones in the market. And target single thread performance. Graphics processing units, GPUs, use smaller cores. Some NVIDIA GPUs have 10,000 plus now, and were built initially for gaming applications. But the main difference is that GPUs are designed to maximize throughput with single instruction multiple thread SIMT architecture, which makes the parallel processing possible. So now you can simultaneously render pixels on the screen to show you that cat everything everywhere all at once without having to wait in a serial fashion, i.e., one pixel at a time. Adopting a fabulous model with foundry partners such as Taiwan Semiconductor, TSMC, NVIDIA developed GPUs demonstrating high throughput measured as 8-bit tera operations per second. TOPS, doubling every year from Kepler 2012 at 4 to H100 2022 at 4,000, more than that predicted by Moore's Law, doubling every 2 years. A big bang for the field of AI happened in 2012 when a grad student team from U Toronto won the ImageNet, a major computer vision contest, with a model trained on NVIDIA GTX 580 GPUs, given their programmability and high floating point performance on the Fermi architecture. One of the researchers later became the co-founder of OpenAI. NVIDIA then developed more general purpose GPUs and improved chip architectures over the last decade. Tensor cores were introduced in NVIDIA's Volta 2017 to exploit sparsity, a feature of matrix multiplications involved in training large language models. Tensor cores offers lower precision, good enough outside of supercomputing, and hence higher throughput. NVIDIA also developed transformer engines, which include high-level programming with linear algebra libraries such as TensorRT for machine learning models, including LLMs such as GPT. The period 1960 to 2010 saw a lot of ups and downs for AI, including the notable AI winter of the 1970s to 80s. The doubling period for compute measures, measured in the number of operations in units of petaflops X days, was every 2 years. After 2012, models got bigger and NVIDIA's GPUs facilitated accelerating the compute double time to every 3.4 months. Starting with use cases such as recommender systems and social network feeds. NVIDIA scaled up to 30% plus market share of revenues, much less in units, in data center processor revenues within just a decade of the early GPUs. NVIDIA has gained about 430 basis points of data center revenue per share per year in the last 5 years. NVIDIA's dominant position in the accelerated compute market is likely to continue. Hyperscaler spending on accelerators is estimated to still be a low portion, less than 10% of their capex, and should inflect upwards in this new cycle. We expect NVIDIA to continue taking share from CPUs over this compute cycle. We model NVIDIA's data center revenues to grow faster than the current consensus CAGR estimate for the next 5 years. 2. NVIDIA is not just a chip maker. Its unique co-design approach integrating hardware and software has resulted in a heterogeneous compute system ideal to ride the current inflection in AI cycle. While NVIDIA's chips garner a lot of attention, given consumer gaming was a major use case previously, what's more important is their systems level solutions for with a full stack approach to hardware and software for accelerated compute. Over the last decade, given its highly profitable gaming segment, NVIDIA invested in R&D at an average 24% of revenues, which funded growth in GPUs. NVIDIA developed a series of GPU architectures that evolved over the years, advancing not only compute throughput, but also storage, memory capacity, and memory bandwidth. Think of memory capacity as the number of books your backpack can carry, and memory bandwidth as how much you can open it so the books can be transferred fast to the locker. NVIDIA GPU memory bandwidth increased 8x in a span of 10 years, with typical CPUs still at an order of magnitude below GPUs. The ability to perform parallel processing and the memory advancement helped GPUs become the computing workhorse on which LLMs grew exponentially. In an industry ever focused on Moore's Law, which clearly slowed down in the last decade due to limitations of physics and manufacturing at small scales, NVIDIA also focused on Amdahl's Law, which is about solving weakest links or bottlenecks in the system level solution. NVIDIA developed the NVLink fabric for fast interconnect between system components such as CPUs and GPUs. A highly relevant acquisition from 2020 in this context was Mellanox, which provides InfiniBand high bandwidth interconnects from system to system and a host of other networking Ethernet switching solutions. Early on, NVIDIA abstracted the middle layer of software, the low level language interacting with the hardware, into a unified architecture layer across all generations of GPUs called CUDA. Software CUDA platform provides developers an end-to-end workflow solutions and comes with high switching costs. AI ML systems are fundamentally stochastic and not deterministic, whether from initializing weights and biases in a neural network or attention mechanism in a transformer. This new software regime was dubbed as Software 2.0 by Andrei Karpathy, former Tesla senior director that returned to OpenAI recently. At the AI Summit 2018, in contrast to Software 1.0, coding is less than 10% of machine learning systems. Data workflow management is the pain point. If you run the same code twice, you may get different solutions, and managing data workflow becomes critical for debugging as well as explainability. As AI gets operationalized across enterprises, it becomes critically important for developers to have end to end solutions for managing workflows. The switching costs in this new regime are much higher than typical SaaS businesses. As more than performance or cost savings, what matters more is developer comfort and inertia. Over the years, NVIDIA developed custom accelerated libraries, frameworks, SDKs, and a comprehensive compilation stack on the CUDA GPU computing platform. With a robust ecosystem of 4M developers, NVIDIA's CUDA helps form a structural competitive advantage that is hard to replicate. CUDA remains a strong driver for GPU performance and ASP uplift at each new GPU architecture. Third, while NVIDIA likely dominance in training is understood, NVIDIA's value proposition for inference workload is underappreciated. Inference is critical as it is performed real time, i.e., low latency at the prompt, or the customer will search elsewhere, for example. In production, unlike training, which is performed as batch processing that can last several days. Per Amazon at their AWS reInvent 2022, for every $1 spent on training, up to $9 is spent on inference. So, as inference costs per query reduce over time and adoption rises, it is likely inference market can grow to be bigger than its current state. At GTC in 2023, NVIDIA provided four optimized solutions for inference: L4, L40, H100, NVL, and Grace Hopper. NVIDIA's CUDA Triton inference engines offer critical capabilities such as model and hardware optimization and quantization. Currently, industry estimates are at about 60 to 70% of current inference workloads being performed on CPUs. From our research, we believe that as LLM and other multi domain use cases gain traction, the market is going to shift away from CPUs as they cannot meet GPUs in price performance for handling the compute requirements of LLMs. A more important consideration is sustainability, with news headlines around power utility infrastructure not being able to keep pace with data center growth. For example, in one of our major data center corridors, as data centers optimize their power envelope, NVIDIA's performance slash watt advantage over peers should stand out, and any energy savings would likely be reinvested for further acceleration of workloads in the data center. 4. OpenAI is talked about as the AWS like a critical infrastructure software play off this AI cycle. But I think the market is underestimating the potential for NVIDIA as an operating system layer for the AI stack. NVIDIA recently laid out AI foundation models as a service, including pre-trained large models of NeMo, BioNeMo, Picasso. It also developed the DGX cloud to be deployed, leveraging the infrastructure of cloud service providers Microsoft, Google, Oracle, in GTC 2022. NVIDIA talked at length about AI operating system, helping enterprises with adoption of AI/M, with CUDA as the low-level programming layer, pre-trained model, and end-to-end data management solutions, including number one, integration with enterprise TensorFlow, PyTorch workloads. Number two, base/fleet command for edge and distributed workloads. Number three, domain-specific toolkits. With the new AI foundation models and a cloud-agnostic AI cloud service DGX cloud for custom GPU instances, NVIDIA's full-stack solution facilitates an operating system layer for enterprises with potential for monetization over estimated 50 million enterprise servers worldwide. 5. Rebound in gaming and strength in auto segment. NVIDIA's gaming revenues are guided to rebound at $2.5 billion per quarter run rate potentially later this year. In other segments at GTC 2023, NVIDIA updated the auto 6-year design pipeline to $14 billion versus $11 billion or $8 billion in previous two GTCs. NVIDIA powered automotive computing systems for fleets of Jaguar Land Rover built from 2025 and Mercedes partnership announced in 4Q FY23 call should support incremental growth longer term. My rebuttals to some key bear arguments. Number one, bear argument. Training demand is mostly pulled forward, and there will be fewer large models, likely lowering compute required. Per OpenAI's paper released with a GPT-4 model size undisclosed, was already trained in August 22 with the trends of Google's Chinchilla and Meta's Llama model papers, where to continue, models are likely getting mostly smaller, with larger models maintained by only a few larger players. While we agree with that, larger models are not going away for sure. They tend to be more data efficient, fewer tokens needed to train, and are needed to derive smaller models. If the industry gets to using more quantities of smaller models, we believe that they may have to be trained on large corpora of data tokens to reduce model log losses. Such tokens could include proprietary datasets for, e.g., Bloomberg recently released a research paper documenting the development of Bloomberg GPT. NVIDIA's GGX cloud is now available on hyperscaler clouds for enterprise to train their own models. The rise of domain specific enterprise use cases could continue supporting compute demand tailwinds. Number two bear argument, the bigger growth segment of AI market is likely inference, which is competitive market, and NVIDIA's edge in training is missing here. As discussed in the investment thesis points, inference is potentially a land grab for accelerators. NVIDIA is likely to gain a substantial share in this growing segment, given number one, low latency, better performance per watt at scale, and resulting TCO advantage of its GPUs. Number two, incumbency of training loads already present on NVIDIA's GPUs. And number three, various software and hardware optimizations available with the NVIDIA CUDA/Triton inference engine. Third bear argument, data center capex is likely pressured given overbuild during COVID. Well, we acknowledge data center capex digestion is likely given the capacity build up in the COVID years. We think this dynamic is well understood from the last earnings at most data center plays. Data center capex dedicated to accelerated server spend is likely to inflect upwards, and we believe capex estimates are likely to be revised up over the next 5 to 10 years of this compute cycle as structural demand shifts may become clearer to hyperscalers. Fourth bear argument, hyperscalers will continue developing their own custom silicon solutions, and NVIDIA's growth and margins will be pressured. At GTC 2023, Jensen announced Google Cloud, Microsoft Azure, and Oracle OCI as hyperscaler partners for deploying DGX Cloud. Google Cloud was announced as a partner for deploying NVIDIA L4 inference chips for LLMs. This positive surprise should assuage, I don't know that word, sorry, concerns around Google TPUs taking away the shine from NVIDIA GPUs. While we wait to see how this debate eventually plays out, for those bears that argue hyperscalers could get competitive in chip making and inhibit the rise of GGX cloud, our counter would be number one, GPUs are likely to perform better than custom silicon for a wider range of general purpose workloads. Number two, hyperscalers would benefit from being utilities, drawing diverse workloads to the platform, selling their commoditized compute and storage to, for example, new crop of AI native startups. For example, Snowflake, as a cloud agnostic data warehouse that leverages hyperscale cloud infrastructure, grew while competing against Amazon Redshift, Microsoft Azure, Synapse Analytics, and Google BigQuery. 5. Bear argument. Newer software frameworks such as OpenAI Triton, PyTorch 2.0, or TensorFlow are a threat. I think it is unlikely existing workloads can be transferred easily given the end to end solution for debugging and explainability similar to version control of software 1.0. That's critical in AI slash ML workflows. With the several accelerant libraries added each year, e.g., QUDNN, QLitho, QOpt, and QQuantum, CUDA's value proposition has been increasing as an all-stop shop for AI/ML developers. CUDA is free for users and aimed to increase the adoption of NVIDIA hardware. From our industry checks, the feedback we got was that number one, it seems hard to usurp NVIDIA's 15 plus year advantage of providing the bells and whistles of AI/ML training and inference workloads unless the new software competitors are proven to be much better and hardware is much cheaper. Number two, CUDA offers critical low level programming without which it is hard, if not impossible, to get NVIDIA GPUs run optimally. Ultimately, the debate can be settled perhaps by which hardware system level scale out solution has the best performance by price and per watt. 6. Bear argument. AI hype cycle is no different than that we have seen for metaverse or crypto. While I agree there's a lot of excitement for AI, it is hard to brush it off as a hyped up craze when we consider the origins of this compute cycle and development since 2018, which make automating creative output. ChatGPT plus queries running slow at peak times in the day and faster at night reminds us of the dial-up modem days of internet of the 1990s. Per an AI infrastructure survey by Run.ai, 89% of companies face compute allocations issues regularly. A recent article from the information mentioned that even Microsoft employees seem to be having a hard time getting access to GPUs. Unlike metaverse or crypto, the AI use cases are tangible and with massive reach, including a knowledge worker base of 1.5 billion and large and small enterprises adopting AI. While some normalization of demand is reasonable to expect over the next 5 to 10 years in this compute cycle, we also expect to see the rise of several new use cases. For example, LLMs and edge inference could breathe a fresh life into iPhone cycle, revamp of Siri, more custom filters likely with multi-model GPT-4. Valuation. NVIDIA's data center revenues exceeded 50% of its total revenues in CY 2022. Over 2017 to 22, data centers revenues grew at a 51% CAGR. Street models we see seem to grow this at 22% CAGR over the next 5 years. We model a base case CAGR of 30% for this estimate. We believe the higher CAGR is reasonable to expect when you consider the drivers within inference as well as training. Hyperscaler CapEx grew at 28% CAGR over the last 5 years. The trajectory of this CapEx going forward may have near-term uncertainty given overbuild during COVID. But AI spend is likely a priority as evidenced from recent AI initiatives at major hyperscalers. We model hyperscaler in the capex as growing at a 15% CAGR over 2022 to 27, a relatively lower pace than that during 2017 to 2022. Our modeled NVIDIA data center revenues comes to within mid-teens percentage of our hyperscaler capex forecast. The split between training and inference revenues for NVIDIA is undisclosed. For the next 5 years, the debate is on what inference market it could be relative to that of training. NVIDIA CEO estimated at GTC 2023 that inference is likely to grow to be the same size as training, which informs our model assumption for inference. We modeled 70 or 30 70 to 70 30% mix of CPU accelerated for inference workloads, now eventually shifting to a 30 to 70 given our conviction from research on the need for GPUs in inference, with some share loss factor to account for accelerators potentially gaining traction. For training, we are with a street in assuming GPU workload accelerating at 25% CAGR, with other accelerators modeled as growing at a faster pace from their smaller base and non-parallelizable CPU workloads growing at a slower pace. My base case EPS 5-year CAGR comes to be over 30% under this framework, reaching earnings power in the range of $13.50 to $15. Assuming an exit NTMPE of 35x, we underwrite about 15% IRR from current levels. With discounting at a rate of 10% for 2 years, we get to $390 2024 EPT. If NVIDIA software solutions get monetized over the next 5 years to even low single-digit percentage of AI enterprise TAM, 50 million servers at at a $3,000 fee per year, presented in GTC 22, there could be an additional upside. I discuss potential catalysts and risks to my thesis below. Risks to my investment thesis where I can be wrong. Number 1. If rates stay higher for longer under potentially persisting high inflation, growth names could be under pressure and NVIDIA's valuation multiple could contract. In the longer term, stock returns follow earnings and our variant perception is an earnings potential, not a market multiple. We think continued execution in data center / auto and normalization of gaming could start an upwards earnings revision cycle for NVIDIA, which can potentially attract incremental buyers in any severe drawdown. From our research, it seems competitive risks are likely limited given NVIDIA's hardware / software and ecosystem advantage. While we are not macro investors, portfolio hedge ideas based on growth or several other factors could be critical for portfolio construction and risk management. Number 2, as of 4Q F23, NVIDIA reported inventory at a high 212 days, with management guiding for normalization in the second half of this year. We will be closely following earnings to track this metric. Third, gaming may take longer to normalize and pose a growth / margin drag. Fourth, AI ML markets may be competitive and NVIDIA may cede share to other accelerators. Cerebras, Sambanova, GraphCore, Intel Habana, and peer GPU makers AMD and Intel, and FPGAs Altera and Xilinx. All base case factors, a modest GPU share loss to these peers, but to the best of our knowledge, NVIDIA benefits from its CUDA advantage, robust ecosystem, and fast pace of innovation, e.g., arriving at new use case specific products such as L4, L40, or H100 NVL at scale. Fifth, NVIDIA had over 20% of sales exposure to China as of last year. NVIDIA developed products such as A800 and H800 to satisfy export control laws. Any export control restriction headlines may adversely affect sentiment. Potential catalyst to watch for: data center. NVIDIA navigating through supply chains for meeting H100 to A100 demand. Adoption of L4, L40, H100 NVL for inference, and a Grace the CPU, Bluefield DPU, Grace Hopper CPU plus GPU, DGX count. More disclosure around revenue model / partnership with CSP or for DGX Cloud foundation models. ASP uplift in the aggregate portfolio as higher ASP products come to market. Rebound in demand from China hyperscalers for products A800, H800. Pickup in enterprise demand for NVIDIA's GPUs / software / AI operating system. Other segments, rebound of gaming demand as supply chains get back to normal and continued strength in auto / omniverse demand. Thank you very much for tuning in. See you next time. Please write down in the comments below what you think of this idea. I think it sounds interesting, but I definitely do not know enough about NVIDIA or the whole market as to why I definitely won't go into this investment.